The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. Tom is on vacation this week, so I'm flying solo here in my jet airplane. And right now, you got the markets up a little bit. You got the Dow up 26 points. S&P's up 6. Composite up 20. Small caps up 3. Our call numbers 877-927-6648. Folks, thanks so much for joining me. You know what, folks? You've got an amazing power within yourself. That power, folks, is so strong that it'll bring about miraculous outcomes, cure incurable diseases, allow you to live a life of abundance, build billion-dollar businesses, paint magnificent masterpieces, folks, but mostly it'll allow you to become wonderful money masters. Thanks for joining the Money Masters Show. Give us a call, 877-927-6648. We're going to go take a look at this market. Is going to bounce today. Don't know exactly how big of a bounce. It's going to be a light volume bounce here. The work to the downside is not over with, but you will see a bounce. And if we take a look at the markets here, I've got the SPYs up here. We've got the 5-minute SPY chart up on the screen. Now you can see as the SPYs were coming into the low, the most current low here that was established yesterday at 5 past noon when the SPYs got down to the 130.85 area. What you can see is what was occurring on the way down, and I've got this tool. It's called Pesavento Patterns, a great tool inside the Ensign software that I use here when I'm doing it. Well, I just use it all the time. And what you can see is that, now this just measures expansions between swing points. You can just visually look at a chart and see the same thing. What you do is you're seeing expansions of swing points to the way down. You know, and you didn't really see much in the way of expansions on the way up. That's what you're starting to see now. So as the low came in here at 1205, what you are starting to see is you are starting to see higher highs and higher lows. And that is the sign of the mere fact that you are going to see a market bounce today. So continue, you know, if you are trading this, and you're trading this thing on a intraday chart, you want to be careful of any type of expansions to the downside. Now, if you just take a look at numbers that you always want to be familiar with, they are the Fibonacci numbers. That, folks, is your 382, 618, 786, and your 1.272 and your 1.618. And, folks, when you see those two numbers come together, any two of those numbers come together, two or more, that's telling you either a strong support or a strong resistance. Just depends which way the market is trending. And if you take a look at the SPY chart here, we're taking a look at the time frame coming into 250 yesterday afternoon. So at 250 yesterday afternoon, what you had was you had a 1.618 expansion of swing points. When I'm talking swing points, I'm talking about where you see major intersections, major reversals in price trend. Well, that swing point that we'd be measuring, that 1.618, would be the swing point that came in at 155 yesterday. The low of that was 1321. So if you take that number, and then the high that you're going against the is a swing point from time frame 120, 12, 220. Let me get my time frames right here. So 220 when it's out at 131.48, and again 155 when it's the low of 131.21. If you take the difference, that math difference, and multiply it times 1.618, subtract it from this swing point out here that came in at 220, that's going to get you right down here to this price range of 131.04. But you don't even need to do that. If you had this tool, if you were just simply measuring swing points, you know, and you can do that with your Fibonacci expansion contraction tool that are on most trading software platforms, what you'd see is you have a 1.618 expansion coming together with a 0.786 retracement. What does the market do from there? That acts as strong support. Market moves higher, makes another expansion. Says 1.32, and that's what it actually made. Close enough for 1.272 for my line of work. Let's go to Nick in Titusville. Nick, thanks for calling. Thanks for holding.
Hello.
How are you, Nick?
Good, yourself?
I am doing great. Thanks for calling.
Oh, you're welcome, sir.
What do you want to take a look at?
Standard Pacific.
Standard Pacific. What's the what is it?
Standard Pacific. SPF.
T is in Tom or P is in Paul?
Peter.
PF, okay. Let me get the Standard Pacific. There we go. Standard Pacific Corp. They operate diversified builder of single-family attached and detached homes in the United States.
Correct.
And they operate in California, Florida, the Carolinas, Texas, Arizona, Colorado, and Nevada. Okay, so tell me what you're doing here. They're 52-week high, $5.74, 52-week low, $2.08. And they are trading out at about $5.49, I believe. Let's go pull up the chart on this. Tell me what you're doing, and how I can help you as I pull up the chart here.
I'm looking for an entry point.
All right, looking for an entry point. So $5.49 last trade, far enough on this. And let me pull this back a little bit further. So far, the stock chart doesn't look too bad. So let's go take a look at this. Now, what type of trade are you looking for here, Nick? Are you looking for longer term? Tell me your time frame.
Longer term.
Longer term. All right. All right, I love to hear that. All right, so let's go take a look at the monthly chart on this first. Boy, that's a housing this is a housing stock for sure. Are you watching on Tiger TV?
Yes, sir.
Oh, perfect. So you can see this stock here, folks. Traded up as high as $49.70 in July 2005, and when it made its lows, it did that in March 2009, down at 65 cents. Nick, can you believe? There's probably some people that held on to that stock at $49.70 all the way down to 65 cents.
I can imagine.
That's a stinger, huh? Now, let's take a look at currently what this thing is doing here. So what I'm going to do is let's put this on a weekly basis. Now that we've established that the stock has been trashed. And let's see if we can find what this is doing. So this has a high volume high out here on the weekly chart that goes back to April of 2010. Did 43 million shares. That 43 million shares was going against 43 million shares back in September 2008. So it made a move up there, and it's headed back into that area. In fact, it's trading inside that candle right now. So it looks to me, I'm going to go ahead and put the line up here on the screen just so you can follow this as well. So you can see the high volume bar of April 23rd, 2010. The low of that is $5.17. You trade at $5.41 right now. And you closed in it the last couple of weeks here. And, it doesn't have the volume, but it looks to me like it wants to run up and test that area as long as it trades inside that bar. Now, it's going to need some real juice, some real volume to get above the 710. Otherwise, it's going to be setting up a triple top out here. So your upside potential on this, Nick, looks like it's in that $7 range. So now what we have to do is find an entry point. And what I would consider doing here is I think that there's still a little bit of market correction to come. So how I would go ahead and trade this, and I think we'll see it over the course of the next couple of days, I would say that with that being the case, you'd want to buy it somewhere, if you could, somewhere in the 440, 450, 460, 470 range. And so as the market does continue to correct, look to see if this thing trades below $5.16. And then if it does, I would say, go ahead and fire away at that as the market is completing the correction process. I expect we'll get a bounce today. I expect that over the course of the next couple of days, we'll see one more down thrust, and that's when I would go ahead and step in on this equity.
I see.
Now, I'll put this on the daily. Let me put this on the daily here. And you did have a decent sign of strength here on June 15th. Now, the low there is $5. The high is $5.27. So I would imagine that $5 area would get tested. Maybe as high as $4.73 would get tested as well. It's really not that bad of a chart out here. It's just that you want to trade this thing in the direction of the market as well.
True.
Now I'm going to go ahead and put let's see what the daily true range is here. Let's put together a potential trade here for us. All right, as long as you called, as long as you're on the phone. So let's put together the whole ball of wax. Let's say market pulls back and you're able to buy this at $5. All right, so that's going to be your target. Now, that's going to be your entry point. Now, your target on this, as we said, is going to be in that $7 range. Now, on the daily, I'm going to pull this back and see what that actual high-volume bar is on the daily. So the high-volume bar on the daily goes back to the day of April 23rd. You had 15 million shares. The low is $6.12. 625, and the high is 710. So we're going to shoot for the 625, the low hanging fruit out there, and see what kind of reward to risk this stock has for us. So the ticker symbol is SPF. So I'm going to calculate your entire position size. And folks, you can do this as well. Let me just do this here real quick so I can show people how they can test this out for free yourself as well, Nick. If you go to the homepage of TFNN.com, over on the left-hand side, one of the things I think will pop up is the Tiger Dollar promotion that still is going on. But if you go down on the left-hand side, there's a little slider. There's an arrow that points down. And if you hit that arrow, you'll see the power of position sizing. So go ahead and click on that. You can download this tool that we're going to go ahead and use right now. And it comes with comes with a video on how to actually use it. How you use it, and I'm going to show you here. We're going to go ahead and enter the ticker symbol, SPF. I'm going to hit the search button. That's going to go ahead and pull up the stock. It's Standard Pacific. That way we know we're working on the proper equity. It is a stock. You have a pull-down menu, whether you're using an index, such as maybe the SPYs, maybe the XLE if you were trading a sub-index, or the actual stock. You're going long on it. I'm going to put in here the trading capital. So whatever your trading capital is, don't tell me what that is. But if for every $10,000, I'll put $10,000. You don't want to risk more than 1% on any trade. Now, the average true range on this, the average daily volatility, Nick, on this stock is 27 cents. When I enter a longer-term trade or any trade, I like to stay outside of that daily volatility. And in a volatile marketplace, I like to use an expansion of what the average true range is. So I like to use 1.618. Now, our entry price, we said, is going to be $5. And we're going to be targeting an exit of around $6.25. This thing may run to $7. You'll just simply adjust your stop as this moves higher. So I'm going to hit the calculate button. And this is telling us that if we use 1% here, that your total portfolio allocation is going to be 11%. So that's within a reasonableness. Now, that would say that you would want to set your stop at $4.56. So you'd enter around 5. Your stop is $4.56. Your target, we know the initial target is 6.25. If you hit that, you're going to get just close to a 3-to-1 reward to risk, 2.86 to 1. And we know that $7.10 is the more likely outcome because you got a high volume high. If I go back here and I just simply put in 710 as our target range, what that will be, that'll tell us your reward to risk on this is somewhere between 2.8 to 4.8 on the trade. So that's how I would trade it. And you may have to enter it a little bit more than $5, but wait for the market to actually complete its correction before you enter this trade here.
Okay.
Does that help?
Terrific analysis, sir.
Oh, perfect. All right. Thanks for calling.
You're welcome.
All right. You have a great day. So, folks, that's how you would actually put together the whole trade. That's really the power behind that position size tool. You shouldn't enter any. It's an easy tool, folks, because you just simply what it does is your most objective time to enter a trade is before you're in it. This way, you have all of the work done for you. Where you enter, where your stop is at, where your exits are at, tells you reward to risk right off the bat. It does it all for you. Go try it out. The homepage at TFNN.com. If you don't have my special report, you can get that over there as well. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes here. Fly-in solo while Tom is on vacation this week. Our call number 877-927-6648. Dow off about 11 points right now. Pretty flat markets out there. S&P's up a buck. Composite up 6. Small caps basically flat. Russell 2000. The New York Stock Exchange up a point. NDX up 7 points out there. You got the U.S. dollar index up 8 cents. Gold. Let's go take a look at gold and silver. You got gold trading down $16 right now, out at $15.72, and silver down 43 cents. Silver down 1 6/10% out there. So we'll start with gold. Looks like we've got the weekly chart here on the screen. Gold in a confirmed bearish mode here. Whether you take a look at the weekly, the monthly, you name it. And my outlook on gold is to see gold pull back into the 1155 area over the long haul, not the short-term haul here. And right now you got gold trading inside on the weekly basis. The most recent swing point is May 18th. That low out there is 1526.70. You are at 15, and the high is 1597.50. You're at 1572 right now. If this does bounce, the upside potential on this is really in the 1634 range. So if we get a bounce in the market here, dollar index pulls back, your upside potential on gold is right in the 1634 area. This 200-day exponential moving average has really been acting as a resistance, a repellent line, as Basil likes to call them, for the maybe he calls that on the bottom. So it's acting as a resistance line here along the top. You can see the last several weeks, anytime gold has tried to get up and move up, it has been held inside that area. So that is your upside potential. So even if you were going to try to play it long here, 1573, and your upside potential is 1634. That's what you'd be looking at. Let's go take a look at silver. Hi-ho silver, you'd be doing the same kind of thing, only it's not the 200-day moving average. It is the 50-day moving average that is acting, or the 10-week, because we're on a weekly chart here, that is acting as the resistance line. Right now you can see that 10-week is at $28.73. You're trading out right now at $27.12, and it is gold or silver is right along this trend line. This trend line that was established back in 2008. It tested it last week. It is testing it this week. You get a close below that with some type of conviction. That'll set off 24.22 as the next test, and that will actually send the silver down to the $17 mark. And there'd actually be nothing wrong with it, except for all those folks that bought silver at $50.40. Then there would be something wrong with it. But as far as charts are concerned, just simply doing a pullback to the 618 or 786 would be just fine. Let's go all the way to Fort Madison, Iowa, to our man Ken. Ken, how you doing out there?
Good morning, Steve. I'm doing good.
That's good. Are you going to give us a crop report?
If you want one, although I'm going to travel north.
Are you?
About 150 miles or so today. I thought I'd take a look at things on the way up.
Oh, good. All right. Then give us a call over the next couple of days. You give us a crop report.
Yeah, we're needing some rain, that's for sure.
Yeah. Still, what's the forecast? Because I'd love to be able to ship you some of ours.
It's supposed to be up to around 100 today.
Oh, my goodness.
Or tomorrow, one or the other.
Oh, my goodness. How often does that set new records then for you guys up there?
No, it gets up there pretty much every year, but not for too many days in a row. Yeah, we could use some of your rain.
Oh, my goodness. I like living in Florida because it never gets into the hundreds down here.
Yeah, I have a son that lives near Orlando.
Oh, you do?
Yeah, we get down there once in a while.
Oh, that's great. Does he trade or invest in the markets?
No, he works for the sheriff's department.
Oh, he does. Well, you got to get him to download that letter from mine. He's got to be able to manage his pension funds.
Yes, for sure.
By using that tool. So, they give him probably about 6 or 7 options to choose from. Although I heard that Orange County, is that where he's at in Orlando? Is he in Orange County?
Yes.
So Orange County, I believe that they released or they gave the option for folks to have self-directed retirement funds up there.
Is that right?
Not that I heard that with regard to city employees, so I don't know if that was the city of Orlando or if that was the county. But
I think the city. I think city has a little better.
Is that it? Okay.
Outfit. And,
yeah. You wanted to take a look at Halliburton, I believe. Is that correct?
I would like to have you take a look at it. I think it's near its yearly low.
It is. In fact, it's below the October 4th swing point. That is not necessarily a good thing. The low on that swing point is 27.21. But you stay tuned. Stay with us, Ken, and we're going to go take a look at Halliburton with our man Ken from Madison, Iowa, folks. It's hot up there today, and it's windy here in Florida. We're going to try to ship some of that wet weather that we have up into the Midwest. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars for Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow off 18 points. S&P's up a point. Composite up 8. Small caps down a point. Relatively flat, quiet market out there. And we're on the line with Ken from Fort Madison, Iowa. We're taking a look at Halliburton, ticker symbol HAL. Now, Ken, I know you follow us on Tiger TV.
You're right.
And what I've got up on the screen here, we mentioned your son who, puts his life on the line for each of us every day, with the type of service that he provides to everyone, and that is just simply fantastic. And one of the things that was most troubling to me back in the 2008, 2009 time frame, and during that time frame, Ken, I was doing a lot of traveling, so I'd be on airplanes, all kinds of airplanes, talking to all kinds of people, and talked to so many folks that were serving us, whether they were teachers, whether they were, firemen, police officers, and, just anyone. Didn't matter who you were. We all serve each other. And, folks really didn't know what to do with their retirement funds. They had boxes to check. Should I get out? Should I not get out? And that's why I went ahead and created the charts, the tool, put together the free report, so that it made it very simple. Some of the stuff we talk about, swing points, ABCs, all those types of things seem a little bit like a foreign language to folks, especially if they're into it, just tuning in. But in this case here, just simply created a tool. It's out there available on most charting applications that makes it easy to determine whether you should be in or out when it comes to your long-term funds in the case. And it works also on stocks. So I've got the Halliburton chart up on my screen here, and I've applied the same tool. And what's interesting is Halliburton, it made a high going back into July 2011 when it traded up to a high of 57.77. This gave you the signal to be out of the stock in September 2011. Would have done that right in around the $40-ish area when it would have given you the signal. You're trading out at 26.69 right now, and that is on the monthly chart. Now, the monthly chart, when you take a look at it, what it is doing, the high volume bar that sticks out there happens to be the bar going back to October 2008. Now, the high on that is 32.09. You're trading underneath it. The low on that is $15.52. So $15.52 on Halliburton on the longer term side is still in play here. Now let's go take a look at what the weekly chart says to us. So on the weekly chart, and you picked it up. You picked it up on the daily chart. I'm just going to put it on the weekly chart. It's a little bit easier to take a look at. And the swing point that it's going back against on the daily was at October 4th area. So it's that week of October 7th, Ken, that has 115 million shares that's being tested right now. Now, the low of that is 27.21. You're trading at 26.71, so you're trading $1 underneath that right now. This week, if it closes below that area, what that sets up is that it wants to get down and then go to the next swing point, which is also the 0.786 retracement area. That would get you down into the $21.10 range. So, you got to wait there's no rush, in my opinion, to try to get in on this stock. I believe that over the longer haul, this has got lower prices coming at it until it rejects that swing point on the monthly chart. But right now, you need to see it reject this October 4th area. And that's a very important support. That was obviously where our markets moved quite a bit higher off of that October 4th low. I believe our markets are eventually headed back there. In the indexes, that was a big bullish engulfing on the weekly basis that you had there. And so it closed below this week. It closed below 27.21, sets up that this thing is going to go test the 21.10 to 24.14 area.
Okay. You think the whole energy market is going to go down?
The XLE, if I use that as my basis for answering your question, the answer is yes.
Really?
Yeah, the XLE is actually, of all the sectors that are out there, the 9 sectors with inside the S&P 500, yesterday, based on a couple of tools that I used, the energy sector went into a sell mode. Now, on the energy sector, if I go ahead and I pull that up here, let me find the little spider's button up here. The energy sector is the XLE trading out at 62.17 right now. So the energy sector, just on a daily basis, is trading inside the June 4th swing point, and it's going to go test at least the bottom of that, which is $61.11. But you take a look at this thing; it had completed an A to B equals CD down. It wants to also, just like Halliburton is already down at the October 4th area. The energy sector also wants to get down there. The high on that is $58.54. The low on that is more likely what wants to get tested, $54.26. And right now, what it's doing, what's really key to be watching, it's below this high volume bar here, well below it, this high volume bar going back to August 5th, 2011. So the energy sector doesn't look very good.
Well, thank you. If you have time, take a look at GEOY. It's a satellite company.
Okay. I'll do that for you after we get off the line with our next caller. All righty?
All right. Thank you for the info.
You bet.
Have a great week.
Travel safe, all right?
Thank you. Bye-bye.
All righty. Let's go to Rick in British Columbia. We continue to go out west, only this time we're going out far west. Rick, thanks for calling. Thanks for holding.
Hey, that's what I like about you guys' show. All of a sudden, I just put in GEOY just to see. I see it fell out of bed yesterday.
Oh, did it?
Yeah. So the first place you want to think about buying is at yesterday's low with a huge volume there.
All right, there you go. Hey, how about that? I love it. I love all the co-hosts we have out here. This is great.
Hey,
we got you. We got John calling in, give us the crop reports. It's a beautiful thing.
Hey, I want to argue the bearish case here.
Yeah,
we know we're just a headline or two away. I know a couple days ago it sounded like you were fairly bullish, and I don't know where you're at right now. You might be looking for a small pullback, and then, I think it was 1380 or 85 on the S&P.
Yeah, I'm looking for the S&P to still bounce and make the longer term ABC up and make the longer term Gartley sell pattern.
Okay.
And so if you longer term, I'm absolutely bearish. And in the shorter term, kind of on the daily scenario, looking for the market to hold in the 1300 area or so, and then have a bounce from there. That's what I'm looking at right now.
If you can just put this the Qs
yes
on a 3-month weekly.
Weekly, okay, all right.
Let me just think here. 3 weekly.
Well, I got as many weeks as you want, so I got it on a weekly chart. And tell me what you want to take a look at. The high volume low from August 2011.
Yeah, well, actually, now let's put it on a 1-year weekly. Sorry about that.
That's okay.
It looks to me like we should get we went up on fumes from around the 56.
Absolutely.
December. I mean, like absolute fumes.
Absolutely.
Like, and you know what? We're set up here for an ABC down right now. Last week we had, according to my charting service, which isn't always the most accurate.
Yeah.
I use Big Charts, which is free, and
it's okay.
And do you see last week how we did it on lighter volume?
As far as making that high,
Did you have a holiday
last week?
Something we always got to think about.
No. The holiday we had would have been at the end of May.
Okay.
So it wasn't last week. You did 192 million shares on the Qs last week.
Yeah. So I'm just saying we're a headline away from an ABC down here.
I do believe we're going to make an ABC down. There's no question about it. Mm-hmm. So I am totally in that camp. Totally in the camp that the market is going to make an ABC down. What I'm looking for is more on the daily chart, looking for it to make on the Qs. So we'll just take the Qs here right now. Looking for the Qs to get, and I don't know where it's going to come from. So we're in this marketplace. We're headlines around from either the market rallying or the market crashing, right?
Oh, I
so you're exactly right about we're always one headline away, from something. What I see the Qs being able to do is get up and test that May 4th gap. Now, whether it only tests the high of May 4th at 65.83 or it actually fills the gap. As soon as if it gets to 65.84 and closes below it, I'll fire away and have a wide enough stop. And then if it moves in my direction, I'll just start adding to it that way from a position size standpoint. But I see, when you take a look at the Qs, one of the things that that I think is important to look at is that island reversal that's out there. And on the daily chart, we're talking about the June 1st, June 4th, June 5th set of candles out there. So until the low of June 6th, gets tested or taken out with volume, that's why I am, I'm taking a look at how the market came off of the full moon low out there on June the 4th. And so that island reversal, especially in the Qs, I think is really important to watch. And the June 4th, June 6th candle, not a swing point, but certainly a gap up there, had 58 million shares. And yesterday, as you pulled back into it, Rick, you only did it with 33 million shares.
Oh, I know. Don't get me wrong.
Yeah.
I don't disagree. We just have 2 or 3 more days left. They're meeting over the weekend. Typical Europe. I mean, let's face it. I mean, they are influencing our market.
Oh, absolutely. And what I know is that they've got great PR machines because sometimes people buy the stuff that they're trying to sell out there. So, they got a long way to go. It's not, their problems are not going to be solved, this coming weekend. All they're going to do is just try to craft some other, shenanigans. But the market may move up, and I hope I hope that, hope's not the good thing to talk about in the markets. I'm looking for, when I just pay attention to, again, on the Qs specifically, which you asked me about, it's really how the market is handling that June 6th swing point. Knowing that you got the island reversal, and because the A to B leg on this, which actually kind of cool about, as we take a look at this Q chart, the A to B leg is so huge because you're from $68 and change all the way down to the low of $60 from June 4th. So that's wide price. That's a large A to B leg on the way down. So even if, let's say, the scenario is everything falls apart and it starts trading below $60, I'm happy to jump on that train. Mm-hmm. Yeah, that as far as the trade, there's still, there's still another 6 points or so at least to make on that trade. And the reality is, it's more than, when I take a look at it, Rick, I take a look at the retracement that has been done so far has been, just about a 50% retracement off of the highs. So I think that there's likely that there's more than a 1-to-1 A to B equals CD down when this thing does give way. Mm-hmm. But my take is, until that June 6th area, it starts coming into it with volume, or that's going to hold, and we're going to see an actual bounce. Today we actually should see a slight bounce, a small bounce. Nothing necessarily huge. Hasn't exactly unraveled that way just yet, but I believe that it will by the end of the day.
Well, I see the Qs. Like, I looked at the charts there, and I do see a potential inverted head and shoulder on a daily right now.
Yes.
And if we kind of hold the 62 or the high 61s on the Qs here,
yes,
and without filling that island gap,
yes,
we could set up an ABC structure down to the top end of that high volume day in early May.
Absolutely. To
about 66.25.
Absolutely. No.
You know what I mean, eh? So all I'm saying is I tried to mention the bearish case, but the bullish case, I think we summed it up pretty good here.
Yeah. No, I'm totally, our reads are really exactly the same.
Yeah.
I really think they are. I just don't see the energy right now in the market. And the reality is, if that does complete your head and shoulders pattern, it's going to actually go up and test the high. Then my case is it's going to go up and test the April 3rd area. Well, right, because now the neckline would be in around and you're the head and shoulders expert. I absolutely am not.
Well, actually, I go by the neckline at 60, not the neckline of 4 or 5 days ago. I go to the neckline of around 63.25.
Yeah. Okay.
That?
Yep. Okay.
Yeah, and now we're setting it up an ABC up to the high end of that high volume day in early May.
Yes.
That could be the bearish cases or the bullish case is what I'm saying.
Yeah, that to me that is the most. So I'm looking. That's exactly right. So it's kind of short term bullish here, but it's really the most bearish thing that could happen.
Yeah, that's right. Yeah.
It really is.
Yeah, it'll be interesting to see which one it was. I'll phone you back when we start when we get through around the 64 level or so.
Absolutely. So it's and right now it's summertime and I think what the market could set up where we just kind of drift sideways, move a little bit lower. We're going to find out. But I think it's a great call that you have on the Qs.
Okay, and before I sign off,
yeah,
RDC is an oil stock, and
okay.
I think there's a bunch of them out there, and I'm telling you, the way I understand these things, they're starting to shape up to be a real good buy for a bounce.
Okay, all right. So
you see the fume, how it's dropping on fumes?
I do see that.
And I think the OIH paralleled it to some degree, even though this one even looks better than the OIH. But anyway.
It's another one. It's another stock that's inside that October 4th low. One by one, Rick, they're being picked off and headed to October 4th. Pretty amazing.
Yeah. Thanks a lot, man.
Hey, you bet. Thanks for calling. Folks, 877-927-6648. I love all these calls. Give me a call as well. Love to hear from you. Dow's up 27 points. S&P is flat. Let's go water skiing on the S&P. A little barefoot. water skiing today. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Got the Dow off 24 points, S&P still flat. And for Canyon, Iowa, we're going to go take a look at GOI Inc. It is a satellite entity. They are, GEOY is the ticker symbol. Right now, it's trading out at $14.10. And what I have up on my screen here is the monthly chart. Now, on the monthly chart, what you can see here, and then if you were listening to our last segment, Rick pointed out that it had a big volume gap down yesterday. and that's on the daily chart. We'll take a look at this. But I'd like to look at the longer-term picture first, just get an idea what is going on with this stock or any equity. In this case here, you'd go back and you take a look at the swing point low out here from December 2008. That low is 1475. You're trading underneath it right now, 1410. Now, the volume there, 8.9 million shares. We're only into Tuesday, and this already has 5.3 million shares. So this is having volume to the downside. Obviously, we know most of it was yesterday, but if it does, if it closes below the 1475 with or without volume, it's going to signal it wants to go down and test really the next swing point area, which is going to be one of my hammer candles going all the way back to August 31st, 2004, when it actually made its lows in the $2.50 to the $9 range. Now, if you pass that swing point, the swing point I'm referring to here is the December 2008 time frame, and you do it with volume, meaning more than 8.9 million shares, then it's absolutely going to go down and test that swing point. It'll at least get down into that $9 range. That's on the monthly chart. You'll see if we pull up the daily chart, it fell out of bed yesterday with 2 million shares. So not a lot of liquidity in this, 100,000 shares, 96,000 shares. Nothing. It's not bad, but it's not exactly huge for a $15, $20 stock out there. And it did make a nice high with volume. So I can see maybe one of the things. Let me pull this back here a bit. So the high that we're taking a look at goes back to the July 26 time frame, has 1.7 million shares up there. But it for the most part right now, this thing is not looking really good, Ken, and looks like it wants to go back and party all the way down to the lows back in 2004. So that was on GOI Inc. If we take a look at the Dow, just in general, what's going on inside the Dow 30 stocks, leading the charge on the way up is McDonald's. We know that's a dead cat bounce, up 74 cents. JP Morgan up 51 cents. Chevron up 50. Walt Disney up 37 cents. ExxonMobil up 32 cents. Walmart up 26 cents. Microsoft up 27 cents after getting hammered. Leading to the downside, IBM, the big leader to the downside, numero uno, down $1.19 right now. Caterpillar, so you got your top two weighted stocks inside the Dow to the downside. That's what's pulling the Dow down. Caterpillar off 80 cents, and that's what's going on in the Dow. Third stock out there is Chevron up 54 cents. If we take a look at the IBD, just to get an idea of what's going on inside the IBD 50, looks like about two-thirds of it, almost looks half and half. If I'm eyeballing it, pretty much half and half, either on the way up or on the way down. You got Chipotle leading dollar-wise on the way up, $2.09. Sherwin-Williams, the paint company, up $1.92. Buffalo Wild Wings up $1.64. Nettie's up $1.46. Visa up $1.28. To the downside inside the IBD, you've got you got Coinstar, CSTR. They're trading down $1.38. Lululemon off $1.18. Cerner Corp, CERN, off $1 and change. EC Ecopetrol down 89 cents. Folks, stay tuned. Got a great show with Kate Stolter. Following that, a commercial-free, uninterrupted hour with Victor Jones. Then we head out to California. Ken Shreve from 3 to 4. I'll be filling in for Tom today from 4 to 5. And Basil Chapman from 5 to 6. Have an absolutely fantastic day, folks. It is Terrific Tuesday. Take care.